Well, streaming giants have seen a mixed picture this earnings season amid a difficult ad backdrop and, of course, heightened competition. For some top takeaways, we're joined by Yahoo Finance's Alexandra Canal. Hey, Alex.
Hey, Rochelle, and you put it perfectly, right? We have seen a mixed bag when it comes to these streaming-facing media companies. We still have the biggie coming up tomorrow. Disney will report after the bell, but let's take a look at some of the top takeaways that we've seen so far. For me, number one would be that patience is a virtue for investors, especially when it comes to some of those revenue initiatives. And I'm going to call out Netflix here because we saw that company miss on revenue estimates with the outlook also disappointing. That initially caused a drop in shares immediately following the results. And that's despite the rollout that we've seen on that password sharing crackdown, in addition to the ad-supported tier. But both management as well as analysts on Wall Street have preached the long game here. The effect of those initiatives, that's going to play out in the quarters to come. So shareholders will have to practice patience there. But speaking of patience, we are finally starting to see some of those cost-cutting initiatives take effect, especially at companies like Paramount Global and Warner Brothers Discovery, which have been especially challenged over the past year. We've seen a ton of layoffs. We've seen, business restructurings, a dividend cut. But those are starting to play out with Paramount reporting narrower streaming losses. For WBD, we also saw free cash flow improve. So that's a positive there. But I want to turn to the negative because the advertising environment, that continues to be a very significant headwind. Linear ad revenue, that declined by double digits for companies like Paramount and WBD. There does seem to be some hope that the back half of the year we could see some improvement, but that ultimately remains to be seen. And then finally, one last thing I want to call out is that double strike in Hollywood. We heard every single media executive talk about this. They desperately want the strikes to end. They have reshuffled their release calendars to account for the strike, but currently there is no end in sight. And I think the longer we see this play out, and if we continue to hear these conversations in Q3 and Q4, the outlook is going to be a lot more dim.
Indeed. And of course, Ali, earnings aren't quite over yet for the media giants. What can we expect from Disney?
Disney is going to have a bit of a challenge quarter, and there's a few things I want to call out here. We're going to see streaming losses that probably are going to continue to mount. The estimate here is for negative $775 million. That's due to a slew of heavy marketing costs. Subscribers are also expected to once again drop by another 2.6 million after their Indian Hotstar brand lost the IPL Cricket League. And similar to other media giants, that ad market that's expected to continue to hammer the bottom line and that linear network revenue, which we know is going to be closely watched on that earnings call. The one bright spot here could be the parks, but even there has been some question marks about the demand, especially as inflation remains high. And then on the film side, we saw disappointing debuts for The Little Mermaid, for Elemental, so that could come in soft. And overarching is what's going to happen with ESPN, right? Who are those strategic partners? How are we going to take ESPN fully over the top? So a lot of questions that likely will be asked on that earnings call. We'll have it all for you tomorrow.
I appreciate that very much. Our very own Ali Canal with that breakdown there on all things media and streaming. Thanks so much.